the oscillator is saying it's going up, so we may be looking to go long, and that's sort of what's happened. But we've, you could argue in a sense, well, we've missed all that move, and we get an indicator here, potentially here, but the move up, you know, it's not great, is it? And this is the thing with using one simple indicator. Okay, Alexander, good morning. I use a version of CCI called Woody CCI. Are you familiar with that? It seems to give more information. Yes, it would. Yes, I'm just Alexander. Woody is a one of the pivot point systems, so it combines the two. I've never seen the Woody CCI myself, to be honest, Alexandra, to be fair, but yes, I mean, that's one of the things about all individual indicators, which is sort of what hopefully I'm demonstrating now, is they're very difficult to use simply on their own. You do need some of the bits of information, or even if you're doing it manually or you're creating a system, you do need other bits to help you, as I say, you know, and it depends what the market's doing. So as I say, when we're going sideways, you know, the oscillators are up and down, but you know, we've moved down there, we've captured that move down, but this move down here, we haven't, you know, the oscillator's still remained oversold at its standard setting, hasn't it? So it hasn't really helped us, and that's the issue, you know. So there we've got a break up, so we would have started to look to go long at this point. So yeah, it'd have been okay, but would we have been stopped? Maybe, but then, and that would have, you know, we're looking to get out as we get into the oversold zone here as we spiked up, but you know, we would have closed out there. So that we'd have got that little trend there, wouldn't we, from that point to that point. But as with all, you know, as I say, as with all systems, nothing's perfect all the time, but we've got most of that trend there, haven't we, from that point to that point. That's closed our long position. Would we go short here? Well, that suggested we go short, but it didn't move down, and it didn't move through the zero. And I'll come on to the midline in a minute, okay? But that's the general, you know, overbought, oversold concept of the CCI, okay? And that's a bit, that's an old chart, but it's a bit, well, actually you can see, so here, you know, we've got on this particular slide, so we got overbought at this point, and we broke down through it and through there. So we went into minus, and then we've gone down, and we've gone long here as we've come out of the oversold zone at this bit. So we've got most of that move down there, that one there, long there, but you know, look at that, it's gone against us, hasn't it? We might have been stopped out on that one, even though that was still going up, so that probably hasn't worked. That one, we've gone into this one looks like it may have worked. We've gone into the overbought area, moved down, but it hasn't gone down, hasn't gone down, hasn't gone down. Again, another example of how the oscillators don't help. So here the oscillators in an overbought area. And that's one of the things with oscillators. They can remain overbought and oversold for a long time, which is what we've got here. Oscillators going sideways, but the trend's going up. Okay, so you know, so great when we're going sideways, oscillators, but no good when we're trending. So you know, but you would have got perhaps a suggestion that we were going to go, well, would you have trusted that? You know, it was broken low there, didn't work, broke a low there, didn't work, broke low there, may have worked a wee bit then, but then it went back up again, and have another break there. So you have to take all of those, some, you know, losing positions before the big break happened there, and then you confirm by the moving average as well as the trends unwound, and we've gone down, we've gone into oversold again, ticked up for a couple of candles, 2 days, then we've gone back down, and then here we've caught the bottom, we've broken out of the 20 period there, we got that. Now it's interesting whether that triggered on this day at the close there or on that day. It's not very clear there, is it? So it probably, to be honest, it wouldn't have triggered until that day. So it would have gone against you initially for 3 or 4 days before it's then gone up. But then you would have been panicking because we got into the oversold area and looking to get out. So that would have been a potential losing trade on that one as well. So, you know, this is what happens with real trading, with real indicators on real charts. So you've got to, you know, have it set up. So don't believe anything everybody tells you that, you know, these indicators are all great and they work all the time. But this is a fairly simple oscillator that works with these reverse numbers. So minus 100 and plus 100. So that's the settings for the charts. So where am I? I've lost me slides. Here we are. So come along, next slide. So here is what I was saying before about changing the default setting. So this, let's just go back. So this is the default setting at 14. It comes out of the MT4 platform. If we say, if you're looking at the end of day, this is a daily one as well, 14. So we take it up to 80. The same chart up on 80, and see it's much smoother. We remain oversold for ages, but we break out here. We only break above here, and we get that big move then. So it's much more like a trending indicator, but obviously we don't know we got to the top at this point till it rolls over, and we still haven't got oversold because we're still positive. So it's still on, you'd still be running it. So as the number increases, the smoother the move is on the for the indicator. And here we've got some others on, and this is just an example. I'll put the Williams percentage R on this one as well, just to compare the two. Is obviously the stochastics here, so 533. So these are all oscillators, okay? All oscillators, and we've got a trend, sideways action, a trend, sideways action, and you can see how they all their performance varies as you stick them side by side. So here RSI, we've neither got overbought nor oversold in the traditional textbook thought. Here we were coming over. We were oversold and we were just moving up here. CCI set at 80. We get one indicator here, one trigger here as we come out of, because we didn't really get out of up here. We didn't get out of oversold. It's gone down. So we've broken out of this -100 level here. So we've got that move there with CCI set at this higher time. I should have used this other one. Williams percentage R, much more in it. We'll come to Williams percentage R in a minute, but you can see it's a bit more choppy. You know, getting a few more indicators. You know, overbought here. Set this default setting 14. We'll come to Williams in a minute. Bit of got that move there, didn't we? Stochastics a bit, you know, stochastic set here 533. One of the key things, one of the issues with stochastic indicator, the K and the D line, is what numbers to have in here. You know, if this is a typical intraday setup. This is on the daily time frame, so this perhaps not. But you know, we got the top there quite well. We got we got the bottom there quite well, didn't we? We didn't go up. We got the we didn't really get. Sort of got that move down there, but that was a big move down, wasn't it? We didn't nothing happened there. We went back up, stopped out on that one, didn't get over, didn't catch the top here. It was earlier here, isn't it? We were up. This stochastic set 533 triggered earlier, like Williams percentage R did back here, but it went against us. So we were going short at this point, went against us and probably stopped us out, and then it finally broke. When it finally broke the good old moving average here, which was that indicator there, but it hadn't actually got into the overbought situation again either, had it? So there we go. Caught a bottom there with stochastic, got a bottom there with Williams percentage R. Here we've got that little move up, but again, it wasn't a great move up, and it probably only indicated at the top there before it moved back down, and then we're not doing anything. As far as stochastic concerned, there was a sign of a bit of overbought there, so you would have caught that top there with Williams percentage R. That would have got that bit of a move down there. But we'll come to Williams percentage R in a minute because there's a key thing with that one that's quite significant as well. Okay, so that's the issue. You can see here, oscillators have been okay, not great, but we've had, because potentially we've had a trend there. We're going sideways there. We've had a trend there and a trend sort of there that's flattened out. So that's what we're looking for now, this break of that. So we caught the top there. So there's no trend there. That's around that one in particular. That's worked best, hasn't it? This Williams percentage R at this particular setting. RSI, neither overbought nor oversold in all of this. So again, I hope this is showing, I hope this doesn't sound too negative, but this is the issue with when you're putting indicators on your chart. Choose the ones or play with the ones, test the ones that work for you with your timeframes and with your particular setup and sometimes the charts you chose as well. Now, Williams percentage R. Larry Williams, very, very successful author, teacher, futures trader is how he started, and he's also father of the actress Michelle Williams as well. One of the biggest selling books, or two big selling books he's probably most famous for, is the Day Trading Futures Online that he wrote in 2000, and that was on the back of his one of his first books back here in '79, How I Made $1 Million last year trading commodities, and he was a commodities futures trader back in 1979. So 1979, just think about that, how long ago that is. So he's been around a while, he's still doing it, and his probably his most significant book was this, The Long-Term Secrets to Short-Term Trading, which he started introducing these concepts. So he came up with this oscillator, this Williams percentage R as he's called it. And the key thing with this one is this line here. This is again from one of Trevor's slides, but it's basically he's using the stochastic that had been around. He's a legend, says Alexander. Indeed he is. I've never seen him speak live. I don't know if you have, Alexander, but apparently he's a really, really nice guy and a really great speaker as well. But all the numbers that he's put together, this is the key thing. It's an unsmooth stochastic. So like we were just looking at the previous charts, where stochastics are very popular and used a lot, and we get lots of overbought and oversold conditions, and they're great for identified divergence as well. I think we've had this conversation before, Alexander, actually. I think the last time I did this in September, I think we had this conversation. Sort of, this is also a bit of deja vu, actually. I think I remember you saying that as well. Alexander's just said to me here, I have, and he's very funny too. Yeah, as I say, I think we've had this conversation before. So, but yeah, this is it. This is the key thing. It's smoothing out. Sorry, it's unsmoothing the stochastic. So let's just read this through together. So Larry Williams, we just said, a futures trader, so he knows he developed it, as a man that was at the front end in the futures pits. Indicates the proximity of the current close. Actually, let me just change my indicator so we can see. Indicates the close the highest high over the observation period. So whatever time you're doing. So the larger the percentage R value, the greater the deviation from the highest high over the observation period. The lower the percentage R value, the closer the figure to the highest high of the observation period. Okay, that might sound a bit gibberish, but that's what he's looking for. He's looking for this extension, this overbought or oversold exaggeration in the market, and that's what he's looking for. So he's smoothed out, he's unsmoothed the stochastic. In other words, if you graph the percentage K for the fast stochastic and percentage R using the same observation period, both indicate the results will reflect of each other either above or below the 50% line. And that's the key thing with percentage R, is this 50% line. And that's what makes it really interesting and really powerful. And we've shown that, and that's the big step forward. And that's why I like this perhaps better than the channel CCI. So it's a reciprocal of the K line on the stochastics. Okay, that might sound all like gibberish, but let's see it in action. Okay, so what he's saying is that the it's not on here. It's not. That's the wrong slide. Here, that's from today. But anyway, let's just go through this again. So here we are, overbought, and we've come down. So that's an indicator. Actually, let's do it on this other slide. I've lost it. There we are. Actually, let's do this slide first. So I'll come back to the example. So the key thing about the percentage R is the crossing the middle line for 50. So let's just go back a minute. So here we've got this -20 and -80. So again, we got this negative connotation, which again puts people off. But obviously the chart looks exactly the same as the stochastic. The stochastic is 80 and 20. Here it's -20 and 80 the other way around. But it's because it's a reciprocal, like we just said on the previous charts. It's a reciprocal of the stochastic. Whoops, where are we going? So here, so the 50 line shows us momentum to the way we're going. So -20 overbought, -80 oversold, break of the midline, and -50 is all the 50 line, and you get this momentum once we broke it. So we'll come to that in a minute. So let me just read through the words first, and then we'll come to the slide. So we got this 50. Again, we got the overbought, oversold. That's fairly straightforward, isn't it? We're in the zone, so you know, watch for breaks out of those zones, not breaks into it. But if you were long, you know, if you go overbought, perhaps look to close your long, or you know, the trend is weakening or breaking out. Is a trend turned on or not? But this is a great one here. That's what the 50 line gives us, this momentum failure. Lots of things, and this is one of the big negatives of oscillators. Once they've come out of their oversold position or their overbought position, they haven't got the momentum to turn around. So they're still, and that's why the trend takes over, because we're still going up. You know, it looks like it's overbought, so we remain in the overbought zone, but so therefore it should turn around, but it doesn't, because the trend's still going up. We then move down a wee bit, but we don't move down with sufficient momentum to break the midline, the 50 line, and therefore it turns around. So all it is a simple retrace for trend following traders to get back in and move the trend in the direction it was going. So what the 50 line gives you is this momentum failure. And once it does break, we can move down very quickly. Okay, so again, fiddling with the period, you get clearer signals. I mean, Trevor here talked about for investment managers, see 6 month periods and longer trending periods. As an intraday trader or short-term trader, these may not be relevant for you. But again, fiddle with the numbers and see how it smooths the indicator, the chart. So let's just go back to, whoops, there's some examples, but let's just go back to the chart and see what we're talking about with this midline. So this is, I just pulled this up this morning. This is a intraday, very simple. I don't know why I took just I chose this. It was no particular relevance. It was just the first chart that came up. CAD yen. So let's just concentrate on this percentage R first. So here we are. We're over this minus 20. So up here at this point, we're overbought, and we're looking to go short. So very simple would have been about there. So that would have, you know, that's gone down. We've gone at this point up here. So actually, let me see if I can change that. Oops, what are my indicators? So we got that move down there, but here, you know, moving averages kept us in. So it's moved, but then the momentum here, you see, that would be a key one here as this candle completes. We stall right on the 50 line, but the next one breaks through. So more sellers have come in here and moved it down, but we're running out of sellers. So we've broke the 50, but we've run out. We didn't get to oversold. So we got back up. So we're still, this is still a short position because we're neither oversold nor overbought. So by the time, so we haven't got into the minus 80 area. So at this point here, we start to tick up again as we break back over the 50 line. But it's not saying, but we're not getting, we move up for a couple of hours, but we move just into the overbought area, but it's nothing too exciting. We moved down again, but we didn't move down. You know, sorry, we moved down again the next hour, but we ran into 50, but there was no follow through momentum. So again, we've just gone sideways, gone up, gone down. It didn't get oversold, but this one, we broke under this one again at this point here. So we broke, the momentum has followed through this time. So we failed this time. We didn't move much down. We failed this time. And at this point here, this is broken and moved down. But look what happens. We move down into the oversold area immediately. And then we sort of turn back up with a little bit of momentum, but we can't. There's no strength to break us back over this 50 line. So we move back down again into the oversold area. Potential a tentative long position here as we break out here. So we move up a wee bit, but again, no momentum. Don't happen to have the moving average on here. Don't break the 20 period moving average. So we don't break the 50, and that's, so again, that's a sign of weakness. And then we come back down again. Here we broke it. We've gone into the oversold area. We come out of the oversold area at this candle here. Again, very strong candle for being oversold. So we had a big follow. That would have been your first. That would have been lots of people seeing that candle. But it was also coming out of the oversold area, and then we got this big follow through candle here, breaking through here, and on it's gone. So this was literally as I was putting these slides together this morning. So it'll be interesting to see what that looks like now, wouldn't it? See how we've broken out. Let's see. Let's get that. Let me go and get that slide now. Does that all make sense? Alexander, it's not a problem. Let me see if I find that. I'm interested to see what happened with that, because that's suggesting more strength, isn't it? As we left that. Let's actually see what happened. I think I've still got the. Yeah, here we are. Here it is. So it was literally just an hour or so ago. So there we go. So that's that big. Where are we? Oops. So that's where we were, wasn't it? That's what we've just seen on the chart. This heads up here. That was our breaking out of the 20. So that was our buy here. Big follow through candle through the 50, but then bang, the moving average turned around. So the story here is, the moving average has kept you in that short trend. So if you're a trend follower, that's fine. But the oscillators have helped you with, perhaps catching some of these little moves up as well. Obviously, the trade again. This is the just CAD yen on the 1 hour time frame. So the short-term time for it, guys, have caught some of these moves thanks to the oscillators, even though we're actually we're going against the trend, because the trend remains under the 20 period moving average. So these little bounces up are being caught by the oscillator, the percentage R here. But as you can see, there's no strength from here right through to here. There's no strength for momentum to follow through those upward movements until we get to here, where we do break through. It looks like it's going to go long, but the 20 period is held. So again, it's turned around in the current hour. So that's oscillators, or that's the percentage R, and that's the CCI indicator. So that's there isn't as I said, I always say this all the time, there isn't a holy grail of indicators or combination of indicators that work. Find the ones and play with them that work for you. The thing I like about the percentage R, it's a simple line, and again, ignore the try and take the negative numbers out, because again, lots of people are very negative about it. But again, it's the same thing. But the key one again is this break of the break of the midline, the 50 line. Oh, what's that going? It's not the one I was on for. The 50 line's important. So we got the extremes, the mid, and to give us this momentum phase. So we'll look and then try fiddling with the periods. That's what I was going to do, wasn't I? I was going to show you the period. So here, let's just go through these. So again, so here the trend's going down. This is the daily time frame of the Aussie dollar. July, September, when I first did this standard setting. So here we've rejected. This is the momentum, see. So we haven't got here. We didn't get oversold. We didn't get overbought. We didn't get overbought there. We didn't get overbought there. It's rejected it again. So we've turned down quite significantly on this channel. We've broke through the 50 at the close of this candle here. So we rejected the moving average. The close of this candle, just using that percentage R here, this is suggesting that we're going to go short because we've backed through the 50. What would stop you from taking that trend? Well, we hadn't broken this low, had we? If we'd put a little, looked like there was support there, but enough information from the oscillator suggests, well, perhaps there is some momentum to take this down. And then within an hour, we've already moved down and we're into the oversold. So we're under the 50. We're into the oversold area, all in this one day as we've moved down here. So we're in here. So we're short from here. Short, going sideways. So yes, we get all the way down here, but if you're going to use the percentage R as your entry and exit point. As we go out to go long, you close your short, and there's 100 odd pip move on that one, just from the breaking of the 50 to going then back out of the 20. So again, so you're going to either closed your short then or gone long at that point, tentatively. You might have added some again because at this point, because we're now over the 50 line, but we've run over and haven't got to the 20 period. So bosh, we're back to where we were if we just kept that. We hadn't, it's a no flat trade, so we got over and it's choppy. And this is why I was saying about the choppiness of oscillators when we've got the high. What's the market doing overall? Well, the market here was moving down, wasn't it? So it's trending down. So it was a bit risky to expect these to break until we had some. So, but you get a little bit of a move against the higher time frame trend. Hope that makes sense. So we're basically going against we're going with the trend there. We're going against the trend there. We failed on that against actually with the trend, wasn't it? This one was supposed to. This was going short here, and then we turned around, and then it's moved back down again. We didn't get overbought here for that big move out. And as this chart came to an end, we were waiting to go long on this, having missed that move, and that's because the trend, the higher time frame trend, overwrought the against the time frame oscillation. So that's how these markets run. So we've got circles within circles. So apply these indicators to the time frames that you trade and with other indicators, and never trade with them in their own case. Here we've changed. Sorry, this is a demonstration of the change in the level. So here that's the default 14. If we change to the 7, you see you get that's already overbought by the time that short signal there is at the same time frame. I'm sure it is. So again, the trend is going down. That's got over. Where are we? Yeah, see, that's too late. We've already, by that time that candle closes, we react very quickly. We go from overbought here. So you could have perhaps got in tentatively there, which is the close of that candle there, and got that move down. Well, it would have been just that one candle there. Then we got oversold, so we're waiting to go up. That's a long position there. And we went into the oversold position there. So that 7's captured that move better, and then go short. Didn't get oversold, didn't get overbought, but again it's missed the big move down because we're not unless you held that short position as it went again. Whether you might have done, I don't know. It depends how you were trading it. It's a daily one, so possibly you've gone short here. It's retraced all of your gain, and then it's broken down, and then we got oversold, so you would have got out there. So again, it's how you apply it. So that's the 7. You get a bit more level of indicators here. The 28 is much smoother, so you're getting less indicators. So here at this time frame, it breached it missed the top there, breached the 50 by the time we got to here, but it had gone against us here. Same time frame, that short position there, it already under the 50, and that taking you in there. Again, it captured this up move, but out of the 20 over the 50 there, but never got into the oversold area, and off we've gone down, and we're back into the oversold zone as we've come down here. So again, moving average, which moving average? This one, no, this is I think this is the 20 period moving average, the blue one, print, if that's what you're talking about. This one here, the blue one, dark blue one. So it's the 20-day moving average, and this is from July last year. Okay, so another what intraday. I mean, this is just examples of them working again. So this one we got oversold. Sorry, we've gone down here into the oversold, but again, this is a 15 minute. So here we're waiting. So within that 15-minute candle, okay, yeah, this is. I think this must be the 20 period. So within that 15-minute candle, so we've moved down, we've broken out of the oversold. We've also broke over the 50, and you'd say, well, there's not much energy left in this for this to go oversold, but as I say, we can go oversold for a long time. So here, the irony here on the short-term time frame is that this aggressive trend that's happened, we've actually captured it on the oscillator. So this is trending for, you know, an hour or so, 2 hours or so. The oscillators helped capture the entry here as we've come out of oversold, and it's whether you would be brave enough to, because it's whipped around so quickly. We've gone from oversold through the momentum of 50, and almost, you know, we're almost, where are we? We're at like minus 20, minus I don't know, about 30, already out of 50 before we even enter. But there we go, and then it's keeping with it, you know, staying with it, you know, that was just as oversold but still trending. So then we look to go short as this, or close our long as it's turned around. So 15, that's only 15 pips there, but it's only 15-minute time frame. It's all relative. So again, it's how you want to play it, and the time frames that you're using. Okay, so I hope that made sense. So in summary, basically, let's just go back to the. Actually, let's just leave. Our slides on here. I'm moving down slides. In summary, then, these two indicators are just an oscillators that I say get overlooked simply because they're looking at negative numbers sometimes, but they work as well, if not better, than, you know, the stochastics, because you've got these fixed numbers, the 7s, the 14s. Sometimes the stochastics, people, you know, fiddle with them for too long, but as with all stochastics, as with all oscillators, I should say, you know, things can stay overbought and oversold for much longer than you might anticipate. But again, they're good for perhaps capturing the divergence of in the market as well. If you know, they tend to front run moves in the market. But as we've just seen on those slides, you know, again, you can capture trends on them, ironically, by using sometimes the shorter time frames, but that obviously don't ignore the higher time frame trends as well, or indeed the higher time frame, you know, channels. So use them at different time frames that fit you, and just have a play with them, basically. So any questions about anything I've talked about today? Oscillators in general, trends in general, these particular indicators. Okay, well, time's up. Tomorrow, much more popular indicator, the MACD, combination of moving averages with Otto tomorrow. Tuesdays are always live analysis days. Next Wednesday, I'll be looking at a very simple trend following system. The exponential moving average system works very well on 1 hour, 4 hour time frames. Scalping strategies, shorter time frames, approaches with Otto next Thursday. News on the 13th, and then the 12th and the, the 12th and the 19th, these two Wednesdays here, Andrew and I will be doing a real basic introduction to markets, the market basics, part 1 and part 2. So if all of this is what I've said today has completely confused you, and you know, you don't know the supply from demand or moving average from an oscillator, you don't know, those words are a bit too not something you've come across before, do join us on these two sessions. They'll be extended, you know, 90 minutes at least each of these sessions, just to go through some very basic introduction to market terminology, and we'll introduce some very simple indicators and fundamental views as well. So do join us on the 12th and the 19th. Say trading and news on the 13th with Otto. Regression analysis, a little bit of what we talked about before, going against the high trend, support and resistance, very important. And finally, for the end of June, we've got the carry trade webinar. You know, what the big players tend to do, and it's important to know what the players are doing, the big banks, the big investors, and how they play the interest rate differentials between the different commodities and exchanges and currencies that we trade. Okay, George is saying hotforex.com doesn't work well. I don't know what you mean by that, George. Do you want to send me an email? I'll send an email into webinars@hotforex.com. I don't quite understand what you mean. it's not working very well. It might be your internet. It might be, I don't know, might be our internet. I mean, nothing's perfect. I don't know what you mean by very well. I don't know where you are in the world, George. So if you can't come to see us, we can come to see you. We're doing a series of seminars. Oh, hang on a minute. There you go, George. You just, oops. What happened then? I don't know if you can still hear me, but my my PowerPoint's just stopped. So don't know what's happened there. I think the screen's still showing. So George, you might be right actually, saying hotforex.com doesn't work very well. I've got a blue screen here. Ismail saying not working well today. Well, a bit of a case in point by the looks of things. It's just stopped, or my PowerPoint just stopped. That's not great. I'll go upstairs and investigate what's going on. So I'll call it a day actually, as we got a blue screen. I don't know really what happened then at all, but technical problems. No, it's not working. Okay, so sorry about that, guys and girls, as they say. Thank you for your time. Hopefully you can still hear me. George, that was a bit foreboding. You're saying not working well. It's enough, it's gone. So I'll call it a day. Thank you very much for listening. Please send me an email for any questions, and we'll get back to you as soon as we can. Okay, take care, everybody. Bye-bye.